Nice. What else is coming? Oh, I love Beat Saber. Lay it on us. I'm excited. All right, thanks, Deb. This is gonna be amazing. I think it's time for my workout. But enough with the fun and games. It's time for everyone's favorite, work. I get that, but there will also be opportunities and benefits that we can't even imagine yet. For connection, for creation, for learning, and joy.
Coming up today, Meta gets bushwhacked. What's behind the crash? Will it spill over to the broader market? Elon pulls a rabbit out of his hat, and a look at other key earnings. And so we just got the latest earnings report from Meta. And even though they beat expectations, earnings coming in above estimate at 471 versus 432. Revenue pretty much coming in line. Just going down to the 5-minute chart after hours. We're currently off over 15% at the moment. And so even though earnings grew on the back of their reduced cost expenditures and unveiling a new chatbot to challenge GPT, Gemini and Bing, all of which could have got the market excited, they gave slightly weaker than expected revenue guidance, but the market seems to be focusing on their rising cost in AI, as they are investing a lot in this space. Zuckerberg very much wants to dominate the potentially big future industry of virtual reality on both the hardware and software side. As heard yesterday, he's given out their metaverse operating system to other VR hardware suppliers, really wants to get in front of Apple's Vision Pro, and that is coming at a big cost, as he has to invest for the long term. And so that part of the Meta company, Reality Labs, posted a huge $3.85 billion loss just in the first quarter alone, which could be laying ground for Meta to dominate in the future. However, the here and now, shareholders are not really liking that huge investment, especially when looking at the total of what Reality Labs has lost, more than $45 billion since the end of 2020. And there's a trend in the quarterly losses for that VR and Metaverse division. You can see that's clearly been climbing. The market initially got really worried about it in 2022, slammed the stock down really hard. Then Zuck came out and called the year of 2023 a year of cost efficiencies, for which he achieved. 5,000s of staff and managed to squeeze their margins higher, and that definitely pleased the market, like we can see in this long-term monthly chart. From the 2021 high to the 2022 low, stock came off a huge 77%. However, since that low, it managed to bounce a whopping 500%, and one of the biggest recoveries of a mega cap stock in history in just over a year's time. So it could be a case the stock got a bit ahead of itself, and like I always say, sometimes it doesn't really matter what the numbers are with earnings. Like if the stock gapped up, that wouldn't be surprising either, because they did beat on expectations. The market could get excited with their inroads into AI. However, oftentimes these are just liquidity events and opportunities for big money to reshuffle and get out. And so it could be a case of profit taking here, and the stocks just run too hard, too fast, and we're merely just having a technical pullback. Because where we are right now after hours, around 417, around here on the chart, and we still haven't even closed the gap from Q4 earnings back in February. Stock gapped up 20%. If we were to close that gap, that would be about 395. And I would say the stock could very well find support tomorrow. Around the 410, we may dip down to 400 and close this gap, or we may find support around 400 and then just consolidate for a bit, if not bounce back, because they are beating on estimates. The business is growing, and in my opinion, they can afford to keep heavily investing in AI. That will give them a long-term advantage. And if virtual reality, the metaverse, is going to be big, then Meta's most likely going to dominate it. And so for long-term investors, probably would pay to stay the course, if not add to positions on these dips like we're getting now. And so just looking at trailing price to earnings, 33 before we got this report. So now with a dive of 15%, it's probably now currently around 29, 28, which is not too bad for a dominant growing business like Meta. My stock fair value has it at 412 as well, which is pretty much right where it's at now. Positive shareholder yield, really good business quality score. However, as we could see on my stock crash risk indicator, was a little elevated going into the close today at 8.6. However, that'll be lower tomorrow as well. So we've had a bit of crash risk come out of the stock. And I'd say there's a good chance we find support around that gap fill from the previous earnings, maybe around $400 a share, if not in the 390s. If we see that over the coming days, however, I suspect we'll probably consolidate around 410, 420 tomorrow. And like I said, I'd consider that a pretty reasonable valuation on Meta's business here. So it's not all that bad. I'd just say there's a bit of hot air coming out of this stock for now. And doesn't the stock market keep it interesting for us traders and investors? Saw Tesla completely miss on earnings yesterday. It's got problems out the wazoo, yet the stock still jumped 14%, as Elon may be getting investors to believe in his dreams of a robo-taxi and the potential to dominate that huge future industry as well. However, again, the market saw it coming. It was just a bit of a dead cat bounce. We were really oversold. Stock was almost 20% below its 50-day VWAP, and so we bounced there today, kissed the VWAP right on the nose, and then just turned back down. Here we are consolidating around 160. However, it's really Meta dominating the tape right now. It's even got the NASDAQ Qs off 1% after hours as I speak, and the big fella as well, NVDA, off 1.46% after hours, after we fell 3.3% in the regular session, and I jumped in a short swing trade near the open this morning after I gave you guys that idea yesterday, looking for a profit target at 7.45 with a stop just above the 50-day VWAP, and just looking at my other swing trade idea gave you guys on Monday, long consumer discretionary. That was up another 1% today, and we're targeting the 50-day VWAP for another mean reversion trade on that as well. And just looking at the market picture, pretty much green across the board up front. Definitely a risk-on move. Only thing red is volatility, gold, and dollar. Well, we've got energy sector, financials, staples, and utilities green across the board. So it's a bit of a defensive rotation along with energy and financials. However, as we can see by the main indices still underneath their 20-day moving averages, the short-term trend is down. You can see a red wave flow here. Was potentially looking for the market to come up to 5100 and stall out. Looks like we're going to gap down tomorrow with a bit of a headwind from Meta. And so this pullback we got today, it's not a bad opportunity to add some shorts or hedges. And even though the indices pretty much finished flat, the VIX kind of found its footing there just below 16. And we've still got some negative breadth, especially in the NASDAQ, measured by new lows versus new highs. And we just got earnings from Bill Ackman's favorite, Chipotle. Very strong business. A lot of people consider the number one fast food chain when it comes to product quality, and they're still hitting good numbers, beating Wall Street estimates. Revenue growing 14% in the first quarter, and we're currently trading up 3% after hours. And just going out to a long-term chart, this seems to be one of those stocks that just can't do wrong and has been in a strong bull market for over 7 years now, delivering shareholders really great returns. We also just heard from Ford, also coming in with a pretty good result and guidance. Said profit's going to come in on the high end of what they had been forecasting, and a lot of people underestimate how big a business Ford really is. Just in the first quarter alone, they did revenue of $42 billion, easily beating estimates and up 3% from a year ago. In stark contrast to Tesla, who's actually got falling numbers now. Stock's trading up 2.3% after hours, and this could still potentially be really good value. My stock fair value has it at $30 a share, so here at $13, we may look back in a few years and see these low teens as a really cheap price. Same with GM. My indicators have it as significantly undervalued, and still just a little over a tenth of the market cap of Tesla, even though it does almost double the revenue of Tesla. And so with Tesla's gross margins now declining, getting towards industry average, we could see the gap in valuation between GM and Ford and Tesla continue to close over the coming years, like it has been already for about half a year or so. So it looks like we're going to gap down tomorrow on Meta's earnings. A lot of people had been hoping the 5% pullback in the S&P was over. It could have been the worst we've seen all year. However, that may not be the case. We don't have peak pessimism, which we typically see when markets do put in a bottom. The fear and greed index still in the fear zone. Haven't seen extreme fear in this pullback yet, and that's normally much more higher probability that we've seen a local low in the market once we get down to extreme fear. And my S&P 500 oscillator did get to oversold late last week, and we may come back down and test that 49.50, 49.80 over the coming days. And the big test will be this Friday when we get PCE inflation data. If that were to come in hotter than expected, stock market should sell off hard into that, and we could test that 49.50, especially as we've got short-term bond yields like the 2-year not really pulling back much. Just sitting there at 4.93, likely to keep pressure on stocks for a while unless we break this short-term uptrend, which is also helping keep the dollar firm as well. Helping the situation a bit is oil and gas pulling back as supplies are flush in the US market, and the higher the price of gas goes, the less people drive. There's a look at crude today, just consolidating around $82 a barrel. Same with gas futures as well, just pulling back a little bit. Still got agricultural commodities on the march higher. Another upward momentum thrust in DBA today, and look at that on wheat. 3 white soldiers, candlestick pattern on volume, much and higher off this base, while cocoa continues to hold up, and so the upward pressure on food pricing looks set to remain for a little while longer. And just moving on to crypto, got some potentially interesting developments. The federal government has kind of been on the fence in regards to this industry for quite some time. SEC went ahead and approved Bitcoin ETFs, but the overall government hasn't really come out with a clear regulatory framework and whether they're going to embrace it or block it. However, I think it may be going into a grey area where the government rather integrates itself and kind of slowly but surely is taking over. Just like they took down the previous crypto kings, Sam Bankman-Fried, Changpeng Zhao, Do Kwon. Now Wall Street's got its hands wrapped around it. Now they're looking to create a US stablecoin and a new regulatory framework for digital assets and a new stablecoin bill that seek to maintain a peg to fiat currencies like the US dollar. There's already those in the private crypto world, like the one run by Do Kwon that crashed, Terra, and the currently most popular one, Tether. However, since a lot of foreign governments, entities, underground organizations use that to bypass sanctions, just like we've heard with the Venezuela state-run oil company that's been using it to get around US sanctions. US government's not going to like that, and so that's why they're going to come out with laws that require stablecoin issuers to either be state-chartered trust companies or banks, and would give the Federal Reserve the ability to block a stake-regulated entity from issuing a stablecoin with a 2/3 majority of the Fed's Board of Governors. Translation, the whole point of cryptocurrencies in the first place, meaning your currency is encrypted, you're like your own bank, is quickly going out the window, and the government, like we've been saying, is an inevitable move, is taking full control of the technology and industry. It's just valuations like Bitcoin and Ether are another topic for debate. Also got the Justice Department asking a federal judge to sentence former Binance CEO Changpeng Zhao to 3 years in prison after he pleaded guilty to violating US money laundering laws. And the DOJ said the sentence in this case will not just send a message to Zhao, but also to the world. And we're still waiting whether the SEC is going to approve Ether ETFs as well. And there's a look at the price action in Bitcoin today, falling 3.4%. Looks to be struggling to reclaim new highs, and same with ETH, bit more of a downtrend actually at the moment. And there's a look at the largest ETF, the iShares Bitcoin Trust. One could argue technically we may be doing a bit of a head and shoulders pattern here with a potential neckline around $34 a unit. We'll keep an eye on that one. Over to economic data today, we've got durable goods orders coming in a bit better than expected. Looking out to tomorrow, we've got GDP data, and Friday, the big one, PCE price index, expected to come in at 2.6% year-over-year growth. And Fed Fund futures, actually a little bit of a change today. Started pricing in 2 cuts this year. Cut in September, another cut in December, which could move a lot come this Friday after PCE. And there's a look at gold, still having a little bit of a pullback off all-time highs for Chinese stocks today. Got a multi-month breakout here, and looking a little constructive on the monthly chart. Could potentially be going into the start of a stage 2 advance after we just put in a big major double bottom. Same with Alibaba. We did find support down there in the high 60s again, had a real strong bounce here. And there's a look at the defensive move this last 2 weeks. We can see that in the spread of consumer staples versus S&P 500, strongly moving up there. And we've still got the spread of inflation expectations climbing, and a pretty decent green candle today on consumer staples. Along with consumer discretionary, the 2 winning sectors today, and a bit more of a rotation out of growth. We can see that with momentum, factor finishing lower, and low volatility, and dividend shares finishing higher. There's a live look at Meta while I speak, consolidating around 417, still off a bit more than 15% after hours. And we've still got energy stocks like Exxon and Chevron holding up really well, even though crude's pulled back. Big bullish engulfing candle for consumer staple Pepsi here. Same with Coca-Cola, pushing up against the top end of its range, and major financials having a little bit of a pullback today, and JP Morgan just firming above the 50-day VWAP. All right, there we have it, guys. Another interesting day in the stock market after Meta earnings. Like I said, I think just a bit of hot air coming out of the stock. The numbers are good. Sure, they had some losses as they're investing into AI. However, that should pay off in the long run. And like I said, I think it's pretty reasonably valued around the low 400s, especially if we dip down to 390 or so. I think that's not a bad valuation for Meta at all. Business is growing, they are beating expectations, and they could very well dominate the VR metaverse industry in the coming years. And there's a look at E-mini futures, currently trading down around 50.70 at the moment. We've got one more day of trading before PCE. The market may coil up going into that, and we could potentially get a move out of PCE. Right now, we're just having a bit of immediate term bounce. Still got some short-term downtrends out there, and we'll see what tomorrow brings. Thanks very much for tuning in to the Daily Market Review and hitting that like button. And since today is Anzac Day, we're us Aussies and Kiwis remember and pay tribute to all the fallen men and women who have fought in wars for our countries, and so on this day every year, we honour them.